Tuesday, the 28th of March. First quarter of 2023 is almost over, which is why here This Morning on Channels Television we ensure that we make every second count. So let's make the next 55 minutes count. I'm Ini John Mekwa. So we'll start off with oil prices. Crude prices retreated on Tuesday after rallying the previous session, with markets focused on developments in the banking crisis and indications of strengthening demand in China. Prices eased after rising at the fastest pace in more than 4 months. On Monday, West Texas Intermediate U.S. crude futures fell 4 cents to $72.77 a barrel. Brent crude futures also dropped 30 cents to $77.82 a barrel. Reports indicate that though risks remain in the banking system amid recent events, the buys in crude oil could be the prevailing trend in the near term. Prices rose in the previous session after Turkey stopped pumping crude via Kurdistan via a pipeline following an arbitration decision that confirmed Baghdad's consent was needed to ship oil. We're still staying in the global space now, but we move on to commodities. Chicago corn futures inch lower Monday, retreating from a more than 3-week high hit in the previous session as traders assess uncertainties about the Black Sea grains deal, although strong Chinese demand lent some support to the market. Soybean and wheat futures also ticked down. Looking at the fundamentals now, the most active soybean contract on the Chicago Board of Trade was down 0.05% at $14.27 for half a bushel, while corn slipped 0.54% to $6.39 for half a bushel, and wheat also fell 0.8% to $6.83 a bushel. Well, Morocco has emerged as the biggest export outlet for European Union wheat in 2022-2023, as sales to other destinations have been curbed by revived Black Sea competition after war disruption eased. Russian business newspaper also reports that Moscow could recommend a temporary halt in wheat and sunflower exports because of that drop in price. Later, we see that Russia had to hold wheat export, but they want exporters to ensure prices paid to farmers were high enough to cover average production costs. Malaysian palm oil futures climbed on Monday, lifted by stronger March exports so far, setting the contract on course to snap a 7-day decline. The benchmark palm oil contract for June delivery on the Bursa Malaysia Derivatives Exchange was up 35 ringgit to 3,547 ringgit, and that's about $801. And palm oil attempted to recover some of the massive losses from last week, but there was little momentum to sustain the prices higher. Export of Malaysian palm oil products for March 1st to 25th rose between 11.4% and 19.8% from a month earlier. We come over to Nigeria now, and we did see the former Prime Minister of the UK, Nigeria, yesterday attending the IM Osigwe event with a whole lot of personalities. But what business would like to take out of that was the passion that Mr. Boris Johnson shared with government officials and past government officials, very important persons there, about economy and infrastructural development.
The job of politicians is to create the conditions in which those people can unleash their potential. Because not only is that morally right, and it's surely right if we care about human development to give everyone the chance to express the talents that the Lord has given them. It's the right way for them to achieve happiness and fulfillment. But it's also, this is the important one, it's also the right thing for the economy. Because what we're seeing everywhere, I think in both our countries, is a colossal waste of human potential. You need to allow talent to move. I mean physically move. You need people to be able to move swiftly and affordably, cheaply, from where they live to where they can maximize their talents. Absolutely fundamental. Absolutely fundamental. Nigeria could be a renewable superpower as well as a massive producer of oil and gas. And we have certainly can share the technology. You've got the technology already. We've certainly got the sun here in Nigeria. Not today, but generally speaking, not in Lagos, I notice. But you have, you certainly have a more powerful share of the sun than we have in the UK. And our trade flows are increasing fast. In spite of the pandemic, I looked at the numbers, they're going north fast, and that's a great thing. And we send you all kinds of things to Nigeria, I'm proud to say, from pot noodles. I don't know why we send you pot noodles, to machine tools, but the Nigerian goods are coming back in ever greater value. Not just oil and gas, but thermostats, oscilloscopes, all sorts of high-value products are now coming from Nigeria. And we could do much, much more. And we could achieve much more investment, mutual investment, particularly, just to make a small political point, if we could end exchange control.
A charge there from Mr. Boris Johnson, former Prime Minister of the United Kingdom, who was in Nigeria yesterday. Well, let's look at the matters arising back here, apart from the politicians that Mr. Boris Johnson was talking about. On Monday, the 6th of February, the Federal Inland Revenue Service, that's the FIRS, and the Lagos Internal Revenue Service, the LIRS, signed a memorandum of understanding to establish a joint FIRS and LIRS audits and investigation team. They call it JITE. And then MOU aims to foster collaboration between the two tax authorities on joint tax audits and investigations to address the issue of duplication of tax on any selected taxpayer, improve exchange of information only for tax assessments, collections, and recovery purposes, and facilitate staff capacity development. Also, the MOU will also assist the FIRS and LIRS to build a reliable and updated database on corporate and high net worth taxpayers. What are the pros and cons of this? How will it affect you? We have Mr. Emmanuel Onosomi, lead partner, Cardinal Professional Services, joining us in the studio now. Mr. Onosomi, thank you so much for your time and good morning.
And thank you for having me this morning.
So, is there anything special about this? These are government agencies who want to collect our money and call it tax. Is there anything special about this collaboration?
Oh, I would like to mention first, and this is not a first. You know, we've had the government, attempted in the past to have joint tax audit exercise, through the platform of the Joint Tax Board, And that initiative then has its own challenges and some tweeting issues, that really make the entire process very successful. We only hope, that the lessons from the past, must have been learned, and then this time around, Lagos State government and the FIRS will do things differently to get the benefit from this. So it is not necessarily the first, it's just a collaborative effort. And to say, in the provision of the Act that established the FIRS, in Section 8, I and J, it gives the FIRS the power to collaborate both locally and then internationally for the purpose of tax administration in Nigeria.
So I think the first thing that will come to a lot of taxpayers, especially those residents in Lagos, will be, will this solve the problem of multiple taxation?
Yeah, and you see, and that is what we've also always put forward to say, the future of taxation is not necessarily looking backward, because when you're talking about tax audit, that means something has been done, and then you want to look at what has been done for the purpose of seeing whether they have been under disclosure or as the case may be. The future of taxation is leveraging technology for digitalization so you can, get more people into the tax net and then foster voluntary compliance, by the people. When people see the dividends of tax, in the economy, it's easy for people to voluntarily comply. And that is where we think the tax authority should be looking but it's where we are. They are still much more interested in looking backward and see how much they can get. One of the biggest objectives on the table is to increase revenue for taxation. And we want to see how it's play out. We hope to discuss some of the pros and cons as we
yeah, well, that's what we're doing, because you talked about increasing the tax net, because I mean, when we look at the 2022 finance bill, it's a source of worry to a lot of businesses, where we see, I think businesses will be taxed about 40% of their profits are going by what we have.
So some multiplicity of taxes, increasing proposal to raise education tax,
exactly,
and also introducing some other form of taxes, which then raise the effective tax rate of businesses even beyond what they have been paying prior to now. Yes, there's an argument that the tax to GDP ratio of Nigeria is pretty low when compared to other economies, but the effect, the impact should not be on existing compliant taxpayer. I think the government should be looking at ways to widen the net, bring in people that have not been complying with taxes into the net so that we can increase our tax to GDP. And I think it's actually a leadership issue. We saw the governor of Lagos State being part of that agreement. What are we doing at that level to make sure that all the political class are also contributing to the tax to GDP ratio? Those are questions on the table rather than going to existing compliant people, to ask for additional taxes.
So you do think that this MOU is just for the audits, and so it doesn't really take us forward to where we need to be, which is expanding the tax nets?
Well, according to the letters of the MOU, it's all about joint tax system, but audit is a significant portion of it, and that's why they've expressly mentioned the creation of the Joint Audit and Investigation Team. You understand, the JAIT, but there are some other objective of the MOU, information, exchange of information. You will know that the FIRS in recent time has had a lot of international treaties, getting information about Nigerians that may be taxable in Nigeria. That is potential area of collaboration to widen the tax net if they are able to mine those data effective for the purpose of tax collection. There's also the issue of efficiency when it comes to, reducing the cost of tax collection. There's the government, if they can come together, to do this exercise, may potentially also reduce the cost of collection, among other benefits, capacity development, from the part of the government, looking from the part of the government.
Yeah, I like what you said about the cost of collection. But before we go there, sharing information, the taxpayers, don't they have a say? I mean, can they just wake up FIRS, LIRS and share information of taxpayers? Because even in universal banking, the banks will have to take the permission of the customer before they can share the information. So do we say because we have provided our information, you have it so you can share with the other tax authority?
There's a data protection regulation in Nigeria that is largely compliant with the global GDPR also. And according to the data protection rule, to the extent that there is an express obligation to perform your duty, you have the right. You may have the right to share some data. For example, the FIRS Establishment Act gives the FIRS opportunity to use data and share this data across national agencies, even international agencies, for the purpose of improving the tax administration. But what they also have as an obligation is to ensure the confidentiality of those data and eliminate any possibility of breaches, on those data. And that's why if you see in that MOU, one of the cardinal agreements is that they are going to put in place framework that will ensure that those data are kept with the highest level of confidentiality and strict measure to eliminate any possibility of breaches.
So the taxpayer does not really have a say. So they can just tell me, we have the strictest and the highest level of security to protect your data.
It is what it is, as that today the law allows them to use your information for the purpose of tax administration.
Okay, we'll go to court. I think that's the most popular phrase these days. All right, so we also talked about the cost of collection. I've spoken to especially the Lagos State Revenue Service. They've been here a couple of times, and sometimes I ask them, do you have the staff? Do you have the strength, to collect? There's some parts in Lagos, you wonder if LIRS has ever been there, So when we talk about the issue of cost of collection, how does this collaboration help them?
So it actually boils down to the way they plan to implement this, And prior to now, before the MOU, what would happen is that what must have been happening, or what is happening, is that you see the Lagos state government has its own audit team, go after taxpayers and maybe a team of 2 people, a team of 3 people, or in some cases, they even use consultants, external consultants, to chase some of these taxes, and also FIRS going about their home business. So what I think, if they can effectively come through this collaboration and have some knowledge sharing amongst themselves, maybe FIRS nominates 1 person and 2 person, and LIRS nominates 1 person. You have a complete team and they go. So that reduces that cost of collection from that perspective. Also looking at the fact that, mobilization, out-of-station allowance, also reduce if you have those kind of. So those are areas where they can potentially, reduce the cost of collection if this framework is being effectively implemented.
The system still sounds crude to me, because in a technology age as it is now, and with the number of places Nigerians have deposited their data, you would think it's not really necessary.
And I mentioned that earlier, Ini, to say the future of tax administration is digital transformation. You need to be able to use the data that you had. I've been here before to discuss data, the importance of data in tax administration going forward. You need a lot of insights from data first before you start going for audit exercise. That will significantly help you reduce the cost of collection if at all you must do a tax exercise. So how well has government put in place technology that will help them mine information about taxpayer to the extent that you only go after the ones that you really need to go after? You could have incurred the cost of collection only to realize that there's nothing to collect. So what do you do about that? So they have been doing some form of risk assessment around that, but not as efficiently as putting in place a robust technology that mines insights from data for the purpose of audit. So that is one of the areas I also believe that their collaboration will look into. Not just make a list. What insight do you have from that list, and how much can you potentially recover, from those pursuits? And
I believe the Corporate Affairs Commission can also provide some information.
You see, that is where the future should be. If you look at developed clime, there's a reason in the UK you have HMRC, tax and customs are together. Because they want to be able to synchronize data for the purpose of informed decision. Government agencies need to look for avenue to marry data for the purpose of governance. You understand? You cannot, I see myself dropping data everywhere, and I'm thinking, what have we done with this data? CAC has a repository of all businesses in Nigeria filing annual returns every year. So how have you been able to sync that data into what FIRS is doing, and possibly what the Joint Tax Board is also doing, in a manner that will help us to increase the tax net? We have a lot of data that FIRS have also collected by all those international treaty, common reporting standard, automatic exchange of information. What have we done with those data? Rather than going back to the usual customers that are already compliant. There's a way that you can reduce your feasibility with the taxpayer and still increase your tax net by deploying technology.
Help me to understand, what do you think is the hurdle among government agencies and ministries that has stopped this synchronization of data? You go to the passport office, you go to the FRSC for driver's license, you do your NIN, you do your BVN, where you work, you also have what's the hurdle? Is it competition amongst them?
So I think a number of issues, multiplicity of issues, but I think top amongst them is the issue of goal congruence. We don't really have goal congruence amongst our agencies. So everybody is pursuing their targets. You understand? FIRS has its own target, Customs has its own target. It's the taxpayer that suffers. So I want to get as much as possible custom revenue from the same taxpayer, and then the FIRS also wants to get as much as possible taxes from the same taxpayer, and you then see the taxpayer suffering some level of multiple taxation because of lack of goal congruence. That goal congruence, defining where we are going as a country and where all our agencies know their role in that singular goal, you understand, plays a key part in solving this problem. And also, you also know there may be some political interest issue. There are people that are for FIRS and some people that, you understand. So some political undertone may also be determining the behavior of all these agencies.
A different focus, but in the same economy. So eventually, we talk about the tax collection for 2023, the economic growth, the real sector. It all fits into the same economy at the end of the day.
So you want to evaluate your growth and say, okay, is this growth at the expense of the taxpayer? You understand? Or whether you have been able to increase the wide net such that, the compliant ones are not feeling overburdened. Because there is also a cost to a business feeling overburdened by tax compliance issue and multiple compliance issue that may eventually make a decision to exit. And that is where we don't want our businesses to get to in this dire situation that we are in this economy. So we need to look at our policy holistically and find some form of good congruence. There must not be duplication of taxes, by tax agencies and collection agencies across the nation.
And in the midst of this, taxpayers are still complaining of compromise in the system.
Yeah.
Sometimes the taxpayers play along because they feel they can pay less, when they comply and cut corners.
Well, it's a sensitive matter to discuss on air, but I think the FIRS, give the kudos to them, a number of whistleblowing policies that they have put in place to ensure that their people are doing what is right, when it comes to tax collection and ensuring that all the revenue that is due to the government comes into the purse of government. Not to say that there may still be some few bad elements, trying to see how, but if you want to look at it from the perspective of the taxpayer also, you look at yourself as a taxpayer and evaluate, is there, if not for the law, is there really a moral ground for me to comply with taxes? Because the only reason I'm complying is because it's the law. You look around, you have to almost fix everything for yourself. And why not just use that money to fix everything for yourself, and whatever is left is what I pay for taxes? There's a moral question around making tax impactful for businesses in the economy. If you get that sorted, then voluntary compliance will increase. And all this issue of underground conversation will also reduce ordinarily. But because there is a mismatch between paying taxes and seeing the impact of taxes, it then makes those conversational efforts less productive.
And all of this fits into another responsibility or expectation from the incoming administration, because a lot of Nigerians are hopeful that, since we have a new man on board from May the 29th, he should come with new vision, brighter vision that would deal with some of these things.
Yeah, so I believe whosoever will definitely be inaugurated. I don't want to speak to that.
Well, we have a president-elect for today, we can simply say that Senator Bola Ahmed Tinubu is the president-elect.
By the president-elect, when the president-elect will be inaugurated, I believe that from his experience with Lagos State, and I think he was one of the president-elect was one of the transformative regime, when it comes to increasing IGR in Lagos State, during his era. And I believe he learned some things from there. I think some of those ideas have also been imported into the operations of the FIRS at the Central. I think he can consolidate from those experience and bring about changes that will further progress the tax regime in Nigeria.
But Nigerians will hope that will not mean more taxes to be paid.
Well, I also pray that it won't mean more taxes because
we already have it high when we look at the 2022 finance bill.
Yeah, so you may want to argue that our tax to GDP ratios is low, but if you evaluate compliant taxpayers in Nigeria, there are multiplicity of taxes, which then make the burden for the compliant ones to be high. You understand? But if you want to look at it and say, how can we improve our tax to GDP ratio? I think the way to go is to see how we can get more people into the tax net. There's this argument to say informal sectors are not taxed, but they are taxed. Whether formally
they are informally taxed.
They are informally taxed. So how do we get those informally taxed revenue back into the purse of the government to add to our tax to GDP ratio? Because as of today, we can't account for those collections from the informal sector. So how can we get those money back into the government force and see how that will improve our tax to GDP ratio so that we can rightly evaluate the informal sector? You understand, whether they are paying taxes or not. That is one issue on the table. And another issue on the table is to also look at, the issue of during this election period, I did not hear conversation about our political people, about their tax affairs. It should be a front burner issue. Do you understand? You cannot lead from the back. You have to be seen to be doing what you want your people to do. The president-elect, on day one, show your tax clearance certificate. Make a strong message that this is the era for tax law buyers. Every political person should also do the same within their respective jurisdiction. And you then begin to see people say, okay, if the leaders, the people that are asking us to do the same, are doing the same, then why shouldn't we do? But if I sit down wherever I am, I say, even the people that are asking me to do something, is just like you training your child. Don't watch TV, but you are on the screen. And your child wonder, why can't I also see the screen? So do what you want your kids to do. If you want them to read, read.
Practice what you
If you want people to pay tax,
pay tax. And show it.
Show it.
All right. Thank you so much, Mr. Emmanuel Olasami, lead partner, Cardinal Professional Services.
Thank you.
Thank you so much. I will be following that collaboration between FIRS and LIRS and see if their own conflict.
Yeah, they promised to issue the guidelines around it and the regulation. We hope to see the framework. And with the consultants, it's our bread and butter. We have to analyze it and see how we can help our clients.
All right. Yeah. Thank you so much for your time this morning. All right. Let's take a short break now. When we come back, it will be Commodities time here on Business Morning on Channels Television. Welcome back. It's Commodities time, so we'll find out what's going on in the commodities space. We have Dumebi Oluwole. Oh, she's back from England.
Thank you, Amy.
Seeing you in flesh and blood.
I'm happy to see you too.
Are you sure you would not rather be in England?
Well, of course I will.
All right, Dumebi. So we see that the price of oil is dropping. So many things dragging it. We see the average price, like a summary for the first quarter of this year, is $82.18, down by more than 7%. Yeah. Being dragged in many places, I see.
Yes. The oil markets right now are, responding to so many events. But one of the reasons why, or the major reason why oil prices declined is because, the markets feared that this global financial crisis, would be more than what it is currently. So, we already know what happened with the Silicon Valley Bank, Signature Bank, Credit Suisse, just
First Republic.
Almost exactly. So almost like a domino effect of a global financial contagion happening. But thankfully, the U.S. Fed, the FIDC, even a rival bank for Credit Suisse, came into somewhat they came in like a stopgap, to ensure that it's not worse than what it currently is. So that's why we're not feeling like there's
and we hear that Silicon Valley Bank has been bought.
Yes.
So that has also calmed nerves.
Exactly. And depositors actually got their money back. So some of the insurance coverage by the FIDC as well, provided some level of semblance to the global financial system. Just to say, hey everyone, we're not back to 2008, we're not back to 2009. So clearly things are very different. So it does feel the same, but it's very different. So basically, that's one of the reasons why. Or that's the major reason why we saw oil prices slump by almost 7%. Even some oil companies saw their shares, affected by this. And not only that, global equities market also saw some, response to this global financial somewhat crisis.
Yeah, even the banking stocks in Nigeria dropped.
Exactly, just based off of this information. But like I said, with this, with the U.S. Fed coming in to save the day, basically, we've seen markets come back up, and we're seeing a positive reaction right now with the global oil market. Between yesterday and today, oil prices have actually, gained somewhat. Still trading above $80 per barrel, which is, still a good sign that the markets are not, going in disarray. They are accepting what's happening with the U.S. Fed, accepting what's happening with the global financial system, and taking it for what it is. Another reason why we're seeing oil prices trade higher is because there's the expectation that supply is going to fall short, and one of the issues here is that Turkey and Iraq, they're having some level of legal scuffle, and that's because Iraq is trying to fight for its borders. Basically, Turkey is expanding into Kurdistan, and that's very close to, or that basically it's almost like an Iraqi part of an Iraqi state, basically part of the Iraqi state, basically, and that is creating some legal issues with Turkey and Iraq, and that could cause a shortfall in oil supply.
Yeah, I think they shot one of their pipes.
Exactly, so about 400,000 barrels per day, and that's definitely going to have an impact on oil supply, and that's one of the reasons why prices are increasing. So there's also the fact that some French refineries, because of the protests as well, are not producing at full capacity. So that as well is causing some level of
concerning
decline
that,
in supply.
I saw over the weekend that that was affecting the sale of Nigerian crude oil.
Well, I mean, we sell crude oil to most of our buyers for crude oil are in Europe. So with France having this issue, clearly that's going to have an impact on our crude oil sales, because they buy quite a lot of our crude oil. So just it's just a whole thing happening with the oil market. And another thing is that the OPEC is scheduled to meet on the 3rd. meet on the 3rd. So we're going to see how these events.
But we also have a bit of good news from China. We see there's forecast that their demand is going to increase.
Yes,
there's a bit of recovery there. And
so that's on the demand side. But most of the issues, or most of the things affecting oil prices today are on the supply side, and a very big one is the fact that Saudi Arabia, Iran, and China, and including Russia as well, are planning to start buying and selling or transacting the sales of crude oil in yuan. So that's a very huge thing, and the markets are clearly just waiting out to see what OPEC's decision would be on that matter, because OPEC and OPEC Plus are the two are two
and
dominant
these guys
players.
Are members of
this. And they are two dominant players in this arrangement. And one of the if we look at it contextually, you see that Saudi Arabia, that's the biggest oil producer and exporter. You also have Russia in this mix as well, and then you have China, who is the biggest oil importer, and they're all in this arrangement together. And
where is Nigeria, please?
Nigeria is definitely in the mix. In the OPEC cartel, Nigeria is a price taker in this mix, and whatever decision happens, that Russia and Saudi Arabia come together, and China come together to make, Nigeria is on the receiving end of it. But basically what this arrangement means is that, number one, we need to understand the fact that a lot of commodities are priced in the US dollar, and oil it's like the biggest commodity that countries consume, countries buy. And with this decision coming up, or with this arrangement, there's a potential threat to the dominance of the US dollar in the global commodities market and the global financial market. And the question now is, how big of a threat is this, and how will the United States respond? Because clearly there will be some level of response from the United States, because this is all that we're talking about. Even though we're looking at a transition away from fossil fuels, with what the war has shown us, what COVID-19 has shown us, is that this transition away from oil is not happening anytime soon. We're still going to be using fossil fuels, and this level of dominance that the U.S. has in terms of the global financial market, they would definitely want it to remain. And the reason why it is this way is because, number one, the U.S. is the most dominant economy in the world, at least as of today. And number two, the U.S. dollar is the most convertible currency. Most countries have their reserves priced in the U.S. dollar. If you're engaged in international trade today, you have to convert your currency to the U.S. dollar. Even if you want to just buy some wig from Amazon, that money will be it's happening in dollars.
We've been following the story of the war, and we've seen a lot of countries like now at the exchange in Russia, they have to a very large extent discouraged the transactions in dollar. They do it in yuan, they do it with rupees, they have programs at the exchange. We've even seen a country like Tanzania from Africa also dealing with, I think, China and Russia and not doing it in dollar. So the war obviously is bringing a new world order. And I'm trying to imagine a world without the dominance of the dollar, what it would do to even a country like Nigeria. Where would the world be turning to? Because Russia, for instance, you cannot use their currency, the rubles, very wide because of the sanctions. And even Nigeria did try to have an exchange program with China. It wasn't successful to the best of my knowledge. So where can the world turn to?
I mean, there is no level of disruption that we would see that everyone will not have to accept at some point. And this is because oftentimes with the way the world works, even with our personal lives, at some point in time, there would be a disruption to the norm. There will be a disruption to the status quo. But how big of a disruption would it be? And how accepting will it be to those in charge is where the big question is. So for now, clearly with everything that we're seeing, like you rightly said, there's clearly some level of defiance, there's clearly some level of disruption coming up in the global world order. But we're going to definitely see some response from the United States. But what the response would be is what is unknown. And a question about the dominance of the US, if that's going to fade anytime soon, the question, I really don't think so. And that's because it's just going to cause too much of a disruption, especially to developing economies. These countries still use the US dollar. We transact in the US dollar.
Our reserves
are in the US dollar. But like I said, with this arrangement, what is going to happen is it's a potential threat to that. And if that happens, or if this arrangement pulls through, what we'd likely see is an immediate reaction or an immediate response would be that the markets will see a level of decline in the value of the US dollar. And what that means for a country like Nigeria, first of all, our import bill would definitely reduce.
Our debt,
and that's
too.
Because our debt levels as well. Because when but then on the flip side, it means our reserves as well. The value of our reserves will also dip. But when you net it off, you see that it's definitely going to have a shock on the economy. But like I said, how big of a threat is it, and how the US will respond is what is left.
I'm sure they're having some very tight
conversations about it.
Now, and I'm thinking of what to do.
And let's not even forget. We have the fact that the IMF, the World Bank, these are people, and they're all from the United States. So, like I said,
so there's going to be a huge fight.
It's going to be, and another thing is that apart from the potential, threat and decline and all of that, we also realize that both on the surface and below the surface, this is some level of a power play here, because we've seen the US and China go head to head on dominance and how they want to be perceived, who is fighting for fighting to lead the world. Basically, we've seen China move in terms of debt to developing countries, FDI to developing countries, while that is declining, while the US's play in that level is declining. But then, so basically, it's just a huge Pandora box that has been opened, and we're just going to see how things continue to play out. But then I read an article by Paul Krugman talking about the dominance of the US dollar, if that's going to go away anytime soon. And like I said, and like he said, and I completely agree with, we won't see that happening.
Don't forget that the Vice President of the United States is in Africa as we speak.
Exactly. And there was, and they're planning to speak to lenders in Ghana.
And I think it was in January we had that Africa-US summit at Washington.
Exactly. And they're planning to speak to Ghanaian lenders to hold on, give the country some breathing space, so to tell you how powerful the US is. So it's just a huge thing that, both economists, analysts, everyone was just going to keep watching to see how these events unfold.
I wish we were talking about the Nigerian naira. Don't you just wish? That would have been so nice. All right, so let's go to the commodity space. What's going on there?
Well, generally, we're seeing a decline in the price of LNG. Natural gas, and that's because of a more accommodating weather. And apart from that, apart from that, countries in Europe also have stockpiles of natural gas that is aiding them during the winter period. So we're seeing a decline in the price of natural gas, and what that means for Nigeria is that with the price of natural gas declining, it could affect our exports revenue. Natural gas contributes about 17% to our export earnings, and a decline in the global price of natural gas simply means that our revenue from that commodity would go down. Then other commodities that we're seeing something happen is cocoa as well. So Nigeria, our cocoa proceeds or our cocoa harvest, is bound to increase because of rain in producing regions like Oyo State and basically in the southwestern states of Nigeria where cocoa production is dominant. But then the issues with the naira scarcity that also affected their ability to produce and sell as much, because local farmers didn't have access to cash that could that they could move in terms of like the transaction for cocoa as well. Another commodity that we're keeping an eye on is the local commodities like rice, tomatoes, and all that. So the prices are mixed for these commodities right now. Prices are mixed, but generally they are still higher compared to previous months.
All right, maybe thank you so much for bringing us up to date there. And, we'll see you on Thursday.
Yes,
welcome back to Nigeria.
Thank you, Ini.
All right, let's take a breather now. Then we head to other markets after the break. Welcome back to Watching Business Morning here on Channels Television. We'll head to the money market now. And Will Ibon comes with the bad news.
Oh no, I do not like that introduction. No,
I did the stock market report yesterday,
yes,
so I know the equities was down more than 2%.
Yes,
what did you do to the market?
No, I didn't do anything.
For a Monday.
Ini, I didn't do that
There
to the
you have
market.
it. There you have it.
That's it. Yeah, but I didn't do that to the market.
2% down.
Investors did that to the market, and I'm going to speak to them
it's your
this morning.
fault.
Okay, so we're just going to look at the market. As you just rightly said, the market tumbled yesterday. It was a big flow of, deep red moving on in the equities market yesterday. The equity space investors seemed angry and profit-taking, took profit-taking to an elevated level. Activities there, picked up from what they started last week. We saw marginal losses, but now they went full-blown on as we saw sell pressures on MTN Nigeria and Airtel Africa, the big guys yesterday. The heavyweights in the market triggered the biggest single-day loss since we saw that. The last time we saw that was October the 19th last year, and also the all-share index tumbled 2.08%, as I said earlier, to 53,750 points. We've lost the 54,000 level there. We're down to 53 now. The market cap still at the 29 trillion naira mark, though. We're wondering how long we're going to hold on to that. Now, month to date is now at 3.7% negative territory, and year-to-date returns is now 4.9%, down from 7% that it opened Monday with. Total volume traded yesterday declined 26.7% to about 100 million units of shares traded yesterday, valued at 4.34 billion naira, and all transacted in over 3,200 deals. We saw sectoral performance bloody yesterday, a sea of red for all sectors: banking, consumer goods, industrial goods, insurance, oil and gas were all in the red. Seplat, this thing for the oil and gas index, the oil and gas that made that tumble 2.02% yesterday. Banking sectors, the tier 1 banks were all down. And the financial sector, we saw dominated top trades yesterday by volume. If we look at the top trades by volume yesterday, we saw GTCO leading that chart with 12.83 million units traded, followed closely by Zenith Bank, 11.91 million units, and UBA, 10.04 million units. And we're wondering what's happening, what's driving sentiments in the market. We had negative market breadth yesterday. 21 stocks lost to 5 gainers. Just 5 gainers in the market, but we're going to bring in Oladipupo Tijani, Head, Norren Berger Advisory Partners Limited, to give us what's going on, to give us the, the facts behind the figures we're seeing. Good morning, Tijani. It's good to have you on the program.
Yeah, good morning, Will. Nice.
So the market heavyweights decided to fight for the belt yesterday. What happened?
So yes, quite a lot is happening in the market. I think quite a number of analysts have come out in terms of expectation regarding extended profit-taking activities, and that is specifically what we've seen in the shares of Airtel Africa and NCR coming in the red yesterday. We saw Airtel dip from estimated 1.5 for 0.7 at 1420, that losing about 128.7. So obviously, two things essentially are responsible with market information. One is, of course, investor sentiment. Then, of course, other side of the markets, analysts are also of the opinion that there's a realignment to general election outcome on the back of what has happened with the election and what expectation is in terms of the parties heading to court. That's one side to look at it. Another side of this divide is to also see that the profit taking may also not be far-fetched from quite a number of institutional investors as well as foreign investors who may also be closing on their Q1 to just take profit at the end of Q1 2023.
So I wonder why investors, give me a bit of a background, why investors hurrying to take profits in MTN Nigeria? The qualification date is not even here yet for the dividend payout. So why are they in such a hurry?
Interesting market we have, if you ask me. So what you see from time to time is the fact that the company declared a dividend. Of course, some smart investors know that there will be reaction to the market for those who want to take position to get the dividend, and as a result of that, the economics takes charge. Of course, with the higher demand, price will surge, and those who are keyed in earlier will just smartly try to take some profit, and that's one of the things we saw imagine on the back of MTN and Airtel Africa, so to say, once again.
Thanks so much, Sidani. We're just going to round off there. Thank you for the insights in the market. We'll look forward to what the market offers today. But just a quick one before I let you go. Is the market going to be bullish or bearish today? What do you say?
Oh, well, we should expect more profit taking. Although some smart investors, again, are taking on positions in solid fundamentals, valuations, and dividend yields ahead of the dividend paying session as we remain close. They continue to remain the choice of strategy. We still, for now, there's still room for extended profit taking activities, and that's what we expect the market to turn out today as well.
Okay, thank you so much, Oladipupo Tijani, Head, Norren Berger Advisory Limited, for sharing your thoughts on the program. So, Ini, that's how we're ending the program. I mean, the market segment today, not the program, though. I went ahead of myself. It's more like it's ended. The market is red. Put wells to talk about.
I have good news from crypto.
Oh, okay, the crypto space. So, at least come turn this place green, because it's definitely not looking very good.
All right, so let's go to the crypto space now and see what that looks like. Not as good as yesterday, unfortunately. We're still in greed, but yesterday we're more than 60 when we talk about greed, but at least we're still in greed. We do hope it doesn't look like the equities in a very short time. Looking at the market cap now, that is also down almost 2% there, but still within that $1 trillion. I wanted to say naira there. 24-hour volume looking good at almost 32%. BTC dominance still within that 40 yesterday, it was still about 40%. So about half of the market is dominated by Bitcoin, and the price there has gone from about 28 yesterday. 24 hours ago, it was still 27, but it's less than 2.3% down, and the volume is 18.46. So I believe we have Olumide Adesina now. Olumide, good morning. Thank you. Sorry we couldn't take you yesterday. I hope today compensates you. But what's going on in the market? Have we started going bearish now?
Well, it's the attack by the United States. If you recall, some hours back, the CFTC, that's the financial regulator in charge of commodities, had queries for Binance, which happens to be the world's largest crypto exchange. And when you understand the dynamics about their trading volume, a tenth of the market cap is traded on Binance. So that really had an effect. And the issues were that they gave the raised flags on trading American citizens trading on unregulated financial products offered by Binance, the fact that there was a lot of red flags. So that pretty much made Bitcoin lose $1,000 in a span of few hours. But having said this, this has been ongoing, if you recall, they attacked Coinbase, they moved to Kraken, and now we're talking about Binance. So it tells you that the United States stance against the crypto market definitely is weighing on the market. And, a few months' time, they plan to launch the Fed now, an instant payment by the United States federal government in moving fiat currencies. So that's pretty much how investors are timing it. But we saw Bitcoin springing back above $27,000 as we speak. And that's because a lot of investors are also looking at the positive part of it, that the CFTC categorized Bitcoin, Ether, Litecoin as commodities, meaning that they are not securitized and they might not have an overbearing financial obligation reporting.
All right, Olumide. Well, I think at the beginning of the year, we did see that 2023 will be a regulatory year, and we're seeing more details of that as the year unravels. Thank you so much, Olumide Adesina, for your time this morning.
Thanks for having me. Yeah.
All right, so let's see a bit of the numbers before we go. Top alts by market cap, we say it's equally mixed there. BNB, Cardano, and XRP, the only ones in the positive there, while the others are in the red. Matic there, down more than 3%, but BNB is the biggest faller there, almost 5% there. And so the top gainers, good gains we see, but not double digit, but at least we see XRP doing good here, more than 8%, as well as the FRN. And there we see the market there also looking good at more than 2%. The red board, the losers there, we see Mask and it. Well, no double digits at least, but we do hope that we are not heading closer and closer to the bear side, and that we can recover even before we fall too much. Well, that's the program today. Thank you so much for being a part of it. 55 minutes of current and relevant business conversations. That's what we did. We'll do it again tomorrow. But 1:30, Willie Bong will be here to give you update from the world of business. But you can watch Business Morning anytime you want if you go to YouTube and Channels TV channel. And we'll do it again tomorrow. I'm in John Lemba.